Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome to the channel Dad's Market Stats. If you're new to this channel or not yet subscribed, please consider subscribing. It'll help me out a lot. We're trying to get to 500 subscribers so that we can get monetized on this channel. So on today's video, I'm going to talk about these three options here that I have that are expiring this Friday, July 19th. So we're going to take a look at how much I made on these options and how we're gonna do once these options are expired. What are we gonna do with the capital that I have invested here? All right, which in total is 2.5, which is 250, 300, and another 250. So in total, that would be $800 of capital that I'm gonna have freed up when these three contracts expire. Okay, so we'll talk about that, what our game plan is for those three sources of capital that I have there. Okay, so let's talk about also this week has been a phenomenal week, right? As we can see here, I've gained $722. And this is because if you look at Bitfarm stock, it has gone up from the previous video. Okay, it was around 240 something on the last video. As you can see now, it's gone up to 299, and along with that, my total return has gone up to $551. So I'm now currently in a capital gains of $551, right? And this number again here is going to fluctuate. I will not be able to collect this money until I sell my shares, which I'm not planning to do right now because I'm still using it to make more passive income. Okay, so for now, this number is gonna keep fluctuating and it's gonna keep going up and down along with the stock price. Okay, which is right now at 299. Let's see. So now let's start talking about these options that are gonna expire. So on this BlackBerry $2.5 call, right? As you can see here, is going to expire on Friday. I've already collected $7 out of the $14 that I made selling this option. Okay, so in BlackBerry stock, I've only invested $250. Now let's take a look at how much I've made in total on those $250 that I've invested into this company, BlackBerry. Okay, as you can see here, I own 100 shares. My average cost is $2.50. All right, let's see how much I've made on those $250 that I've invested here. As you can see here, I started investing here June 20th when I sold this $2.50 put, and I made $28 from selling that put option. And after this option expired, I was assigned 100 shares of this company, BlackBerry. So now I had 100 shares of BlackBerry. So the next step for the wheel to close out is to sell the covered call, which I did on July 1st. On July 1st, I sold the BlackBerry $2.50 call, and I made another $14. Okay, so that brings the total of the amount that I made on my $250 investment into this company to $42, right? $28 plus $14 is $42 that I've made on my $250. So that means that my interests have compounded to now I made 16.8% return on my $250 that I invested. And I started investing on June 20th. We're currently on July 16th. And so that means that I only had to hold my money there for less than a month. And I was able to collect 16.8% interest on it. Okay. So if we continue to do that, I could probably make more than that for the whole year. All right. You're not going to make this amount of money in the savings account. All right. Let's talk a little bit about inflation here, ladies and gentlemen. Okay. Because one of my colleagues told me about inflation, and what he said was pretty interesting. So you know that inflation is around 5% every year, which means that what you have as far as, let's say, for example, you put $1,000 into your savings account, right, into the bank, and you didn't touch it for the whole year. If you only made like 0.1% interest on that $1,000, right? Or 0.01% interest on those $1,000. okay, and you lost 5% due to inflation, well, that means that you lost money. So if you had $1,000 in your savings account, right, and due to inflation, that $1,000 is now worth only $950. But you made 0.01%, right? Which is what? What is 0.01% of $1,000? It's certainly not $50. So you ended up losing money by holding your cash, your $1,000 cash in your savings account. Why? Because of inflation. However, if you manage your own savings, like I'm doing here in the stock market, you actually are making money on your savings, right? Like as you can see here, I made 16.8% return on my investment into BlackBerry using only $250, right? I already made 16.8% return on this, right? So when this option expires on Friday, I am most likely going to receive my $250 back that I invested into this company because my shares will most likely get called away due to the fact that BlackBerry is currently trading at $2.54. So my shares will get called away for $250. So that $250 is going to appear in my buying power next week, right? When this contract expires, if BlackBerry still trades above 250. All right, so that's good. If I do receive my $250 back from my BlackBerry investment, I'm going to withdraw that cash so that I can make a payment that I need to make next month. All right, so that's my plan with this option here. I'm going to withdraw my capital from this option, having made 16.8% in less than a month. All right, very good. So next option here we're going to talk about is my Bitfarms $3 put that is also expiring on Friday. So for this put, I had to invest $300, right? Because it's a $3 put. 3 times 100 is $300. Okay, so let's take a look at this put here and see how much I made on it. Okay, as you can see here, my average credit is 40 cents times 100, $40. So I received $40 for this option. Total return so far is $25. So I still have $15 left on this contract. The value of this contract, which is still there, right? So my break-even price is $2.60. Since I agreed to pay $3 for this shares, right? I agreed to pay $3 for 100 shares of Bitfarms with this contract, and I already got paid $40 or 40 cents per share, $40. Then that means that my break-even price is $2.60, right? 260 plus 40 is $3. So I already collected $40 out of that $300 that I'm investing. All right. So as long as this company Bitfarm stays above $3, then I might be able to get my $300 back. But if it stays below $3, then I will be assigned 100 shares of Bitfarms for the price of $3. Okay. And then we're gonna have to figure out what we're gonna do about this option or this capital that I have, these $300 that I have here already. But notice that I invested $300 and I made $40. So let's take a look at how much interest I made already on these $300 here. Okay, so let's go into the calculator. We have $40 that we made out of $300. So that gives me 13.33% return on my investment out of my $300 that I invested in order to sell this put option. Okay, so I already made 13% on these $300. So now if my $300 gets freed up, then I'm going to withdraw another $300 from my Robinhood account. So 300 plus 250, I'm looking to withdraw $550 by Friday. Okay, and I'm going to show you how I do that. Okay, I already made 13.3% here and 16.8% here. Now let's take a look at the final option here that's expiring on Friday, and that is my Bitfarms $2.50 put. All right, so this option right here, let's take a look at how much I made on it. My average credit is 20 cents. Break-even price is $2.30. That's a total of $2.50, right? I already collected $20 from this $250 investment. How much interest is that? I believe it's 8%, but let's confirm that. 20 divided by 250 is in fact 8%. So I already collected 8% return on this $250 investment, right? This option has already gained $19. It's already lost $19 in value. So I'm up. That's what I'm up on this option. I'm up $19. Okay. But this option is going to expire worthless because Bitfarms is currently trading at $2.99. So that means that I cannot purchase 100 shares for $2.50 because it's over the price that I agreed to buy them for, as you can see there. Okay. So this option is going to expire worthless. I'm going to receive $250 back from this option here. So that means that in total on Friday, I'm going to expect to have a total of $800 in my buying power. Okay, that's going to be released from these options right here. Okay, so those $800, I am going to withdraw them and put them back into my checking account. Okay, so I'm going to show you on my next video how I withdraw the money from my Robinhood account once it's freed up from these options, and how I put that back into my savings account. Not my savings account, I'm sorry. My checking account, right? Because I'm going to need that to pay some bills. All right, so that's it for the options that are expiring this Friday. I want to talk about a company that another one of my colleagues mentioned to me, right? He told me about this company here called Plug. So I'm going to take a look at this company for him. I'm going to let him know if it's a good company to invest in. And you also are going to see what I do in order to find out about these companies, okay? What kind of research I do into these companies. So first, let's take a look at Plug Power is the name of this company. As you can see, it's trading at $3.28. Let's see what this company is about. It says here about, let's read the whole thing. It says Plug Power Incorporated provides alternative energy technology, which focuses on the design, development, commercialization, and manufacture of hydrogen and fuel cell system used primarily for the material handling and stationary power markets. Its fuel cell system solution is designed to replace lead acid batteries in electric material handling vehicles and industrial trucks for some distribution and manufacturing businesses. The company was founded by blah, blah, blah in 1997 and is headquartered in Latham, New York, blah, blah, blah. Okay. So as we can see here, the CEO is Andrew Marsh. They have 3,868 employees. It was founded in 1997. The market cap for this company is $2.48 billion. Okay, so it's not a small company, right? It's worth $2.48 billion. So that means that they have a lot of shares outstanding right now, because since their stock is trading right now at $3.28, right? And it's worth $2.48 billion. That means that they have to have close to $1 billion, close to $2 billion, close to 2 billion shares outstanding in the market right now. Okay. Now, as we can see here from the 52-week low, it's sitting at $2.20. All right. Before we go into the news on this company, let's take a look at some of the technicals, right? Let's take a look at some of the technical analysis from this company. Since it started trading, right, way before Robinhood was around, right, way before 2000, the year 2000, this company was trading at $775, right? So right now it's trading at, as you can see, $3.28. So what does that mean? What that means is that this company most likely did a couple of reverse splits before it reached the current price that it's at right now, $3.28. Okay, because it lost a lot of money, as you can see here. I seriously doubt that it started trading at $775 in the year 2000. So most likely they did a bunch of reverse splits in order to get to the number that they are at right now. Okay. So now that's as far as its max, right? Let's see how it's been doing in the last year. See, in the last year is gone down $8.93, right? As you can see here, past year. Okay. Now let's go ahead and take a look at the 3 months, or let's look at first at the year to date. Okay. So since January, beginning of this year to date, right? The stock is only down $1.16. But as you can see here, it's been going up and down. It's been on a roller coaster right now. Okay. It opened up in January at $4.40, came down all the way down to $2.42. Then it went back up to $4.70, came back down to $3, and back up $4, down again to $2.30, up to $3.44, down again to $2.28. Now, if this company was not trading options, it would also be a good company to swing trade, right? But fortunately, this company is trading options, as you can see here, trade plug options. So we're going to take a look at those options later on so I can let you know which options would be good to sell on this company, all right? But now let's go into their news release, the news reports that have come out on this company from Yahoo Finance. We can find out what their Q1 earnings were, okay? So let's see what this report says about them. Here it says, wrapping up Q1 earnings, we look at the numbers and key takeaways for the renewable energy stocks, including Plug Power and its peers. Renewable energy companies are buoyed by the secular trend of green energy that is upending traditional power generation. Those who innovate and evolve with this dynamic market can win share, while those who continue to rely on legacy technologies can see diminishing demand, which includes headwinds from increasing regulation against dirty energy. Additionally, these companies are at the whim of economic cycles, as interest rates can impact the willingness to invest in renewable energy projects. The nine renewable energy stocks we track report on an okay Q1 on average. Revenues missed analyst consensus estimates by 2%. All right. But let's go ahead and look at what the Q1 was for Plug. It says here, powering forklifts for Walmart's distribution centers, Plug Power provides hydrogen fuel cells used to power electric motors. Plug Power reported revenues of $120 million, down 42.8% year on year, falling short of analysts' expectations by 23%. Overall, it was a weak quarter for the company with a miss of analyst earnings and revenue estimates. Plug CEO Andy Marsh stated, "We continue to make steady progress by following our established goals and business priorities. As we enhance our financial performance in the upcoming quarters, Plug is set to retain its leadership role in advancing the hydrogen economy, which is anticipated to experience swift expansion and widespread adoption globally in the future decades." All right. And here, as we can see in the chart, is the amount of revenue that they've made since Q1 2019. All right. They've been going up at the beginning, then they tanked to a negative, and now they're starting to come back up, as we can see from this chart here. All right, $120 million in revenue is what they made this quarter. Plug Power delivered the weakest performance against analyst estimates and slowest revenue growth on the whole group. The stock is up 29% since reporting and currently trades at $3.25. So it's pretty surprising that it's up, even though it missed 2 times, right? In revenue and earnings. But it's pretty surprising that this stock is up right now. All right. But that is what we see from Yahoo Finance here. Let's take a look at this company's website and see what else we can find out here. All right. On this page, we see here are a few of our growing list of customers. We already know that Walmart is one of their customers. Let's take a look at some of the rest. RDOT Group, don't really know too much about. Apex, Hyla, Nikola, TC Energy, Abengua, Boeing, pretty interesting there. NASA, another interesting company. BMW, FreezePack, don't know too much about them. Home Depot, Whole Foods Market, Amazon, one of the Magnificent Seven stocks here. AT&T, CSX, Southern Link, Mulag, Carrefour, Walmart, as we talked about already, and finally FedEx, right, is one of their customers of this company, Plug Power. So not bad, not a bad list of people to have as your customers here, right? So that is how they made their $120 million in revenue. However, they still lost money due to the fact that they do have a lot of costs, okay? Let's take a look now at their balance sheet. As we can see here on the balance sheet, the total current assets is sitting at $1,766,573,000, okay? All right, that is the total current assets. Now, their total current liabilities, as you can see here, is $911,444. So they have more cash than they do have liabilities, right? Or right, so they have more assets rather than they do have liabilities. So not a bad balance sheet. You know, we wish that they could become profitable, right? But as of right now, they're spending more money than they are making. Okay, fortunately, their balance sheet is still looking good. They had extra cash from previous quarters, no doubt, but their balance sheet is still okay. All right. So this is not a bad company to invest in. Of course, you have to do your own due diligence. This is not financial advice. Now, if you did choose to invest in this company, let's take a look at some of these options here to see which ones we would be able to sell that would make sense for us. Okay. You can see here the stock is currently trading at $3.28. So we want to sell a put option. And let's take a look at the ones that are expiring this week, Friday. Okay. If we sold a $3 put option, we're only going to make $2 from that, right? And we're not going to get the shares because they're trading above $3 right now, right? Now, if we sold a $3.50 put, right, for $23, as we can see is what it's selling for right now, and that means we really be buying these shares. It's 350 take away 23. That brings us to 20 or 327, right? 327 is what we would be buying these shares for. Okay, that's only $1 less than what it's trading at right now at $3.28. So we'll only be buying them for a discount of $1 at this point. That's not enough for me, ladies and gentlemen. I want to make more than that. So let's take a look at the options that are expiring on the 26th. You can see here, make a little bit more here. 350 take away 30. That's 320, right? So that is how much we'd be buying the shares for if we sold this put option expiring July 26th. Okay. Yeah, so we'd be buying them for 320. So we'd be making right now $8, right? We'd be buying them at a discount of $8 from what it's trading at right now. If you're happy with that, then you can go ahead and sell this option. You are buying them for a discount, and your money is only being held for a week, less than a week, right? If it's expiring on the 26th, yeah, that's less than a week. I mean, less than 2 weeks, rather, right? Okay. Now, if you sold this $3 option, you most likely will not end up buying the shares, and you'd only make $7 selling this option. Okay. But you would be hedging yourself against the price of this stock going down, right? Because you'd be buying them for really for $2.93. All right. Yeah, $3 take away 7 cents. That's $2.93. But let's take a look at, let's go out a whole month. Let's go out a whole month and see what the options are trading at this point. Okay, here we see there is more premium for these options right here. So if you saw this $3.50 put expiring on August 16th, so you can see here we're making $52, 52 cents already per share on this contract. So what that basically means is that 350 take away 52 cents or 0.52. That means that we're really buying shares of this stock for $2.98. Right? We take a look at the current price, $3.28. Oh, yes, we are buying them for a discount if we sold this option. Okay, if we agreed to buy them for $3.50 and we collected 52 cents upfront. Okay, so that is a good option to sell here, ladies and gentlemen. And you'd be making over 10%. Let's take a look at how much interest you would be getting back on your $350 here. So we're going to go ahead and do $52 that you're making out of 350. So that is a 14.8% return on your investment if you decided to sell this put option right here. Okay. Now, if you wanted to hedge yourself against the price of plug going back down, if you remember, the lowest it traded at this year so far is $2.21. So it could drop down over $1, right? And so because this stock is that volatile, that is the reason why you're able to sell these options at such a high premium. Okay. Now this $3 put expiring August 16th, right? If you invested $300, you'll be making $23 here. That's less than 10%. So I really would rather sell this $3.50 put rather, because even though I'm investing $350, I'm making $52 back. So it's almost like I'm really just investing $300, right? So that is why I would rather sell this put option right here, ladies and gentlemen. But of course, you have to do your own due diligence, see what you can afford to invest in the stock market, and decide which option is better for you to sell at this time. Okay. But these are the options that you could sell if you wanted to start investing in this company, Plug Power. All right, ladies and gentlemen. So I hope that you learned something from this video. I hope that you learned how you can look and decide on which put options would be the best one to sell for you, and that you will be able to see how much interest you can make back on your money that you put into your savings as soon as you deposit the money into your broker's account. Okay, you'll be able to collect interest here. As we saw, the most we could collect that right now is around 14% interest on a $350 investment, which is not bad, right? Because you're not going to make that in a savings account. You may not even make that in a CD, right? Because a CD, you got to hold your money there for 6 months to a year before you're able to collect the interest that they offer you in the bank. All right. So just some food for thought, ladies and gentlemen. I hope you enjoyed this video. We already know what the game plan is. Once these options expire, we're looking to collect $800 and withdraw that, put that back into our checking account, and I will show you on the next video how that happens. All right. So if you have any comments, if you have any questions, please drop them in the comments below, and I will talk about all of your questions. I will make videos on them so that you can learn more about the stock market. All right. One quick side note, ladies and gentlemen, I did talk to a lady that I bumped into when I was working on my job, on my main source of income, right? Which is, many of you know, I'm a courier. So I did bump into this lady, and I mentioned this channel to her, and I was really taken aback by what she told me, because what she said was that, I asked her if she wanted to learn how to make extra income, right? And what she told me was that she already makes a lot of income because she has 3 jobs. 3 jobs, ladies and gentlemen. And if she's listening right now, man, I really felt bad for her, man, because people are killing themselves working 3 jobs. How are you even gonna enjoy the money that you're making working 3 jobs? So what I told her is, I said, listen, what I do, I told her, is easy. It's not hard. What I do is easy. Working as a courier, lifting boxes, delivering packages all day, every day for 10 to 12 hours, that's hard work, right? This investing that I do, managing my savings, is not hard work. Okay. So if you have 2, 3 jobs and you're killing yourself out there trying to make some extra income, reconsider what you're doing, ladies and gentlemen. Please find out how you can make extra income using your savings, so that you don't have to kill yourself out there working over 60 hours a week. Okay. You want to enjoy your life, ladies and gentlemen. Enjoy life. Life is not all about making money. You want to have time also for recreation. You want to have time also to spend with your family and for every other important thing out there. Okay. Life is not all about money. All right, ladies and gentlemen, you want to have time for all the other things that we need in order to be happy in life. Okay, ladies and gentlemen. So that's all for today. I hope you enjoyed this video. And until next time, as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.